All right, so you have 5 names for us. Let's go one by one. Your first is Pool Corp, a solid 2026 so far, but well off its highs. Why are you bullish on swimming pools?
Well, a couple of reasons. So first of all, this is a really robust company. The way they structure their deals is not just the pool infrastructure. So they actually do a lot of maintenance, and so business-to-business maintenance. So what we're looking at is in 2023, for example, 62% of their revenue came from just pool maintenance. With Trump coming out and saying we don't want institutional buying of neighborhoods and homes, we know that this is going to be retail-based, and we really do see long-term runway for this company. And so that's really what we're looking at, is what can we get invested in that's going to be a long-term play that is robust and not just depending on new home builds and new construction.
But is it a housing recovery play at the same time then?
I don't think so. I think it's just more robust with the maintenance. Goldman has a strong buy rating on it, and it's really got a great price earnings ratio. So we feel like this has a long-term runway. It's 50% off of its all-time high, even though because it's been routed down because of the housing market. So we feel like it's a good discount right now.
But doesn't require the housing market to actually recover.
It doesn't. That's the point. Because of the maintenance, it does not require new construction build to really come online.
Your next pick is Occidental Petroleum, a Warren Buffett pick as well.
Absolutely.
Why Oxy at this point in the cycle? What's the catalyst there?
So obviously the Middle East tension, Iran, all of these things, Venezuela. I think the Venezuela play really has a different, really made energy and crude robust buy at this point. We're looking at a 2-year runway at least for energy to really take off. And really with Occidental Petroleum, it's not just crude. They're also in middle market operations, they're in gas, and they're actually in chemicals as well. So we feel like with where it's at and with the 2-year runway for energy, this is a good play.
But oil's trading around $64 right now. So given that, do you expect it to stay there? Does it need to be around there for you to remain bullish on Oxy? Where does it need to go?
I feel like for the 2 years, we're going to see a creep to the upside. I'm not suggesting that we get back to $100 a barrel or anything like that. We don't need to see that because it's heavily discounted right now. So I think that we're going to see incremental growth, but we don't even need massive growth for this company at this level because of their middle mixed operations.
Okay, next up, Intuit, a beaten down software name. It's down something like 40% year to date. Is this a tax time call? What is this?
So Intuit has been oversold. It's 50% off of its all-time high, and I can understand the software sell-off, and people are really leery and saying, "Oh my gosh, AI is going to take over everything." Intuit reminds me of Visa on the financial services side. They are really partnering with a strategic partnership with OpenAI to bring an AI component into their mix. Intuit has a suite of products people don't even probably realize. It's Credit Karma, it's QuickBooks, and it's TurboTax, beyond other things. So we feel like they are strategically positioned for the end consumer, and with their partnership with AI, recognizing that we have to bring our software into the AI world. And so we feel like 50% off, it's a good discount, it's a good buy.
Okay, your highest conviction buy is Duke Energy. Why is it a buy at current levels?
Duke is really interesting. So what they did is they gave us forward guidance and said, they're expecting 1.5 more gigawatts of power need just from one data center, and there's 9 more coming online that they're involved in and they're actually positioning. So we like Duke Energy for that reason. They are a strategic company that has really forecast the need and the growth. They have the most integrated CapEx spending for all U.S. regulated energy in the entire sector. So we feel that Duke is the best position to capitalize on all of the AI data centers and the growth that is coming from the AI side. And that's why we picked Duke.
Okay, and finally, MicroStrategy.
Yes.
But this one's a sell, and I have to say this was a bit surprising to me from you because I know that you're bullish on crypto, but not bullish on strategy, I should say.
Yeah, not
Why not?
MicroStrategy. It's 77% off of its all-time high. I believe in microsolar, I believe in Bitcoin, I believe in blockchain. However, when we look at the 2 and 10-year yields, and we look at 2-year forward guidance on that, we're seeing that Bitcoin could possibly pull back to 49,000 simply because of the fundamentals that are happening with yields and transitions from where we are to current, to really the blockchain. And so for that reason, we do feel that Bitcoin all the way into mid-2027 is going to be in a rotation to the downside. We don't see any events right now that are coming up. Of course, we could be wrong. There could be some geopolitical event that makes people go back to what they call digital gold, and that would be a BTC play. But at this time, with where we're seeing the yield curves and the geopolitical risk and all of the financing of the global central banks, we feel that Bitcoin could potentially come to the downside all the way until mid of 2027. And that's why, because it's off 77% of its all-time high, we don't see a recovery for a while. So that's why we're a sell for now. now.
So you sell strategy. Do you sell Bitcoin then at 67, 69,000 here, assuming that it's going to go lower?
I mean, it's certainly an opportunity. I mean, if you're a long-term Bitcoin believer, then you should just hold as a long-term asset and not worry about the volatility. But if you wanted to make price, movement, gyrations, profits, then I would say for sure we're seeing it going down potentially through mid-2027. And if you're not wanting to see that happen to your portfolio positions, you could probably take some profits, exit out, or maybe you're not taking profits, maybe you're taking a little bit of a loss, but it's going to be less than potentially the loss could be all the way into mid-2027.
Okay, and you mentioned the digital gold piece of Bitcoin. Has this year proven that it's not digital gold based on the fact that gold and Bitcoin have very different performances?
That is 100% yes. I mean, I hate when people say, actually, and I can't believe I even said it, but I hate when people actually refer to it as digital gold, because that leaves the investor with the impression that this is as good as gold, only digital. And it's just not. Let's just be honest. We do not have a risk case yet, proof of concept of what Bitcoin will actually do during an actual major recession. We really have 2022 as a barometer. That's really it. And so I feel like until we have a true recession and we see how Bitcoin performs from start to finish through it, we don't have a proof of concept of how this is going to perform as a risk-on asset during recessionary times. I think really too, Caroline, the problem with Bitcoin is it's still such new technology and people still don't understand the blockchain. They don't understand what it is. And for that reason, people get scared and say, oh my gosh, it's coming down, it's coming down, it's coming down. People like me are out here saying, oh, based on forward-looking guidance and the 2 and 10 year yields and what is going on with central banks, we see it actually coming down, and they don't understand it, they get scared and they sell out of it. So until we have the ability to say, this is how it performed during this recession from start to finish, and it really has proven its worth and salt, then we're going to have to still consider it speculative. The other thing is that we don't really have full clarity on the regulatory environment. Not only do we have the Genius Act, that's great, that's the stablecoin, that's great, but if you look at the Clarity Act that the House of Representatives passed, that got held up by the Senate because the banking lobby came in and said, hey, we want to put our banking framework around cryptocurrency. For example, we don't want issuers to be able to give benefits for holding stablecoin. And so because the regulatory framework is not 100% set and clear, because we know the banking lobby is going to try to come in and create their framework around, old technology framing new technology, which is never going to work. Banks have to stop that right away and figure out how they can capitalize on it themselves and be a purveyor of it themselves for a positive benefit. If they can't do that, they're going to get left behind. That's why I go back to Visa and say what they have done, the inroads that they have made to be able to do payment processing on the blockchain, that is the gold standard for me, and that's what all financials need to do to be able to actually continue to see their worth, that you cannot legislate your worth. Creative destruction of capitalism means that there's a better way and you're the old way and you got to get with the program.
Okay, so finally, is Visa a top pick as well?
I love Visa.
All right.
Yes.
We'll leave it there. Rebecca Walzer, always appreciate it.